Well, good morning, everybody, and welcome to this season's Esop Sofa, which is going to be looking at progress being made on PISCES. Firstly, just to thank the Esop Centre sponsors and the FS Club sponsors who actually allow us to range across these topics so freely. My name is Robert Pay, and I'm the chairman of the Employee Share Ownership Centre. And it's my pleasure to be able to welcome today's speakers. And here are some of our sponsors, and thank them very much indeed for making this possible. Before we get underway, a little bit of housekeeping. This webinar is going to be recorded, and the video and podcast will be available in about 48 hours time. We'll be holding a Q&A session, so make sure that you use the chat facility, which is up on the top right-hand corner of your screen, to send in your questions through the talk as they occur to you. Now I'm going to hand over to our panel of Damien, Ifti, and Veronika. And Damien is going to kick off by giving us an overview of where we are currently with PISCES and to set the scene for us. Damien, over to you.
Thank you very much, Robert. Yes, PISCES. Well, PISCES is the latest idea from the London Stock Exchange and the government, both the current government and the prior government, to try and revitalise the capital markets in equity for the UK. It's intended to create a market in securities for privately owned securities within certain parameters, within certain windows. It's a regulated structure, and trades will go through licensed PISCES platforms, and we're pleased to be joined on the panel by Veronika Oswald of JP Jenkins and Ifti Nazir of Vested, both of whom will be offering PISCES platforms. PISCES has been talked about for about 2 years, and it's been sort of on and off, and the granularity of what's been proposed has changed a bit. There's been a little bit of skepticism, if I may say so, here and there about whether it's really needed, what are the advantages, disadvantages, but it is actually now arrived. We're standing on the doorstep of PISCES, and the door is starting to creak open. So in the next few months, we will see PISCES go live. And that's an important development for perhaps years, maybe decades to come for the UK capital equity markets. And it's important to the companies affected. It's important to the advisors to those companies. It's important to the investors in those markets. And it's important to the UK economy as well. It's important to bear in mind that although PISCES is based in the UK, both the companies that can list on PISCES or have their securities traded on PISCES can be anywhere. It is a global offering. The only exclusion is that you're not listed somewhere else. And equally, on the investor side, unless you're an excluded investor, you are able to invest in PISCES securities from wherever you are. And Ifti will probably be mentioning some stuff around the active investors all around the world who are looking for good homes for their money. And these are companies that are not easily investable if you're an international investor, other than maybe through the PISCES route. But from our point of view, speaking now as the Esop Centre, the Employee Share Ownership Plan Centre, it's very important as PISCES in promotion of employee ownership, and that's both equity ownership on a broad basis, but also equity incentives for management and the top team. Those incentives have been tax favoured in the UK since the early 1980s. Well, actually, the SIP originated in the profit sharing share plan in the late 1970s, in fact. So the SIP share save on a broad basis, the company share option plan, or CSOP, and more latterly the EMI, Enterprise Management Incentive Plan, have been very important tools for companies to reward and incentivize and engage their employees and top management in the success and ongoing creation of value, literally for decades, coming up for 50 years now. So private companies have had a nibble of those benefits, but not a big bite. And they've only had a nibble because there's some problems with private companies. The first is some companies naturally assume that control should be vested only with the founders or the family, and letting equity into the hands of others is some kind of, in principle, wrong thing. It's all about control in that minority of cases. The majority have problems with valuation or exit. When people come to sell their shares, especially in a broad-based plan, people retire, some people unfortunately die, they need to sell their shares, they need an exit. Now, the traditional solutions for that for a private company is a private valuation, often using a formula, which is rather complicated in many cases and a little bit non-transparent. And it's bad enough trying to explain to broad employee base what a share is and why you should invest in the company and how the share value moves without trying to explain the formula. So it's a clunky mechanic. But the other thing is the exit. To create an exit, the private company will often create either a closed market or they'll buy shares back for cancellation. Both of those entail cash flow commitments, and that hinders growth. So operating share plans is a cash drain of an uncertain and worrisome kind. And especially if you're holding shares in trust as a free float, you've got cash tied up maybe for years to come. PISCES solves all of these problems, not at a stroke, as we'll be hearing from Veronika and IFTI, but very considerably. So we should welcome PISCES. There will be some bumps along the road, I don't doubt. If we knew what those bumps were, we'd probably fix them now. When they happen, let's all not panic. We've been here before with new inventions. So there will be technical solutions to a lot of this stuff. And as a share plan practitioner, holding my hand up, and also advised companies on compensation, quite a lot of technical criticism comes on PISCES because the shares can become readily convertible assets, RCAs, and therefore triggering PAYE and national insurance obligations. Yes, we're not debating that. That's actually going to happen. And in fact, that's a good thing because that shows there's a readily available market to sell the shares. The big trick for this is to make sure that companies tie up the timing of when the tax triggers happen with when the liquidity events are available to make sure the two mesh neatly together. So PISCES is to be welcomed. There's a number of dimensions and technical things that we will get into as we wade it a little bit further. And if I can sort of hand over to Veronika now of JP Jenkins, who has literally decades of experience. Not you personally, Veronika, although you are very experienced, I'm no doubt.
I was going to say, Damien, thanks for that. It is 20 years. I'm trying to hide it actively, but
from what you said, we'll be in safe hands. To explain who's already been dealing with trying to create markets in private company securities very successfully. So Veronika, over to you for your contribution for now.
Thank you, Damien, and it's wonderful to have the scene set. We are, as JP Jenkins, really excited about the PISCES. I just would like to perhaps point out that the PISCES is actually being brought by as an initiative by FCA and HMT. Obviously, London Stock Exchange does play a heavy part in there because they have just received their license a couple of weeks ago, which is wonderful. But it really is an initiative that is heavily supported by the government and the regulators. I think we all see all that rather challenging news where the regulators are being very protective, but they're being so protective that is actually burdensome and hindersome for the businesses. And we do need to remain open-minded and really help businesses to get the tools which they require. JP Jenkins has been operating in this space for almost 35 years, I have to say. I only have 20 years of experience, so not the full 35 years at JP Jenkins. But I really do see that change and that shift in how the markets are operating. When I started 20 years ago in the city, I was actually part of an LSE AIM listed company, and a lot has changed in those 20 years. And companies are now staying private for much longer. What that means is good companies, private businesses are able to access capital, and that means that their cap tables are widening, and IFTI will be extremely well placed to really showcase that, because he deals with a lot of businesses that are on that trajectory and what they're starting and then building, getting to funding rounds and really seeing how they perform throughout their life cycle. But what that means is now you have a lot of shareholders and a lot of investors that are locked in. The IPOs have not been very fertile over the last few years in London. You see that it has become rather expensive to become a public company, and the routes to exits have been really limited. So we're really excited about this PISCES private intermittent initiative that is coming out of the government and FCA. It is really welcomed because we do see a really healthy demand there. JP Jenkins has been providing a trading venue for unquoted assets. So what that basically means for private companies, where you have shareholders locked in and recycling those for new investors for almost 35 years. The PISCES framework is important because it does bring a whole host of benefits, and these are typically tax related and structure related and also widely accepted. The EMI schemes and employee share ownership schemes are going to be accepted under the PISCES regime. That means that employees will not be losing their benefits, and the employers won't have to change on the system as much. So this is wonderful. Instead of paying the traditional income tax, which can be often 40% plus, you will be able to retain your benefits and pay either, pay the capital gains tax. So I'm not going to pretend I'm a tax expert, so I'm going to stay away from the whole percentage and tax mitigation element. But the important element is that there is going to be a rule where those benefits are going to be able to be retained. I think we touched a little bit on the valuations, and this is something that we typically, which we see day in, day out on JP Jenkins, because we already have about 60 clients that trade their shares on a private basis, and those valuations are really important. We have a different ways of how we approach it. I think the idea of the PISCES regime and the different venues and how they're going to be operating is there needs to be a very clear way of how these valuations are derived at. They can't just be made up. There needs to be some substantiation behind them, and that valuation needs to be set prior to these trading events. So it's quite exciting for us because this is something that we have been focusing on JP Jenkins. We do have a way of having evaluations that are accepted. FCA is comfortable with that. I'm sure other platforms will have a similar ways of approaching it, but it's a nice kind of trodden path, which is getting a little bit more of a regulatory oversight, which also means that a heavy acceptance from the industry, and hopefully the fund managers, the pension funds, will follow suit.
Lovely, thank you, Veronika. And IFTI, maybe you could include within your comments some stuff to do with the non-UK type investors who might enliven the market, because obviously it's all very well as UK promoting companies onto these platforms and offering shares for sale. There's got to be depth of liquidity in terms of willing buyers as well. And if you could explain a little bit as well, just as Veronika did about JP Jenkins, what Vested does.
Yeah, thank you, Damien, and thanks, Veronika. Vested is a share tech platform, so that means that it covers everything associated with equity. We've been running for about a decade now, so we have been helping people become vested in the businesses that they're working with or investing in. So everything from employees and share schemes, which you mentioned, Damien, through to early investment rounds and more mature investment rounds. So if you think about it, for us, we've had lots of businesses. We serve thousands of businesses. maybe let's think about PISCES as being relevant for maybe 10% of those, the more mature, the larger ones that have been around for a while. There are people, and Veronika used a phrase earlier about being locked in. Whether you're an employee with this promise of a big prize of an EMI, let's say, or an early stage angel investor that thinks, yeah, 3 years down the line, I've watched The Apprentice, so it only takes a few years for these companies to get to a level that they'll IPO. Life is not quite like that in reality. And there are lots of stages to what people might think of as exit. And on that route, different people who have become vested in those businesses do need outs. And it's being not just a frustration. I mean, that notion of being locked in is actually quite crazy. You've gone in with all good intentions, but you're pretty well stuck. I think this opportunity of PISCES is brilliant to be able to unlock that. It's a safe environment. I mean, we can do all the things associated with PISCES already from a functionality perspective on the vested platform. But what PISCES does is gives a structure around that, a format, and actually lets everybody know that it exists. And it's a sensible way, a sensible alternative to getting out of that locked box position. Going back to what you were talking about in terms of the internationalization of PISCES, or the international opportunity that it creates, it's actually fantastic. I think London is leading the way here. I know that there are other markets. This is not the only secondary market around on the planet, but I think if we do this right, we can really reinvigorate the capital market in London. We know of many investors, let's say in the Middle East, in Abu Dhabi, in Dubai, who would love to invest into businesses, not just here in the UK through direct or indirect through SPV type structures, into business here in the UK. But we've also, we've taken on a business in India, just as an example. There is a huge demand for investment and opportunities to invest there. A lot of these disconnected international opportunities need to be connected, and I think where better than to create that marketplace than London. Willing buyers, willing sellers with really exciting opportunities to chase. And I think it's a fantastic initiative. We're fully behind it. Going back to what you were saying about getting licenses, we're working towards getting our license. It's not in our hand, unlike the London Stock Exchange Group,
the process
in their hand, but then they did help to create the process. It's something that we're working on real time.
Thank you, FD. And I agree. I mean, London as a capital market was leading the world for, well, literally hundreds of years. The difficulty or the dry drought of the recent lack of IPOs and some companies delisting from London is an attraction of the USA rather than a weakness of London itself, dare I say. How that's addressed is a bigger issue. But PISCES is a very interesting development. I mean, there's deep investor trust combined with the infrastructure, both the technical infrastructure, the legislative framework, the tax framework, and also the disparate of expertise that's based in and around the City of London to do with the accountants who understand all this, the tax advisors, the lawyers, the full gamut of the infrastructure is there to make this really work, and on a trusted basis. There is possibly a danger that PISCES as a light touch kind of market might edge towards the kind of very heavily regulated status, which creates a lot of on-cost, both direct through the listing cost, but also the compliance costs, the disclosure costs, and the advisory costs of a full listing. And that's really got to be avoided. And similarly, I think it's quite important that some of the corporate governance norms that are coming out of institutional investors are not read through immediately from the full listing into AIM companies and then into PISCES. So many AIM companies comply with the Quoted Companies Alliance Corporate Governance Code, and when you read that, it's actually quite similar to the UK Corporate Governance Code, you're not getting much of an easy ride in terms of straight corporate governance. Some time ago, not that long ago, about a year, I guess, I invited the Investment Association to comment on PISCES and whether they were going to issue any guidance in terms of things like executive compensation and dilution. And they thought about it for a bit, and they came back and said, guess what, PISCES is a light touch market. We don't want to be represented there. People's governance and stuff like that can flow and ebb within the control structures that they're agreeing under their PISCES listing. When they graduate, if they graduate to the main markets, then they'll start to fall under our umbrella of wider governance control. And I thought, as a London market player, that was a very mature way of approaching, and actually quite an encouraging way of saying, yes, let PISCES run. Free markets will operate. We know in free markets that sometimes there's a bit of abuse or bumps in the road, as I pointed out at the beginning. We will address them. It's not the end of the world. In light of all of that, Veronika, what else would you, as JP?
I was just actually going to add to that, Damien. It's very true, and we have obviously been dealing with FCA on our application for PISCES, and we see a real shift. FCA has been very understanding. They like to learn how we operate in this space because we've been doing it for so long, and obviously we're now talking about the intermittent nature of trading and what does that actually mean and how do you manage it. And we have been offering some insights from what we do, and we were mentioning to FCA, well, yes, intermittent sounds great if you have an event where you have a large institution that will potentially come and scoop up number of shares from whether they're from employees or just existing cap table holders. But what we see from our experience, people like to trade, and as soon as you find a buyer, they would like to execute. So we've suggested, instead of just looking at 1 or 2 or 3 events a year, why don't we make the events as frequent as the company needs, because each company is very different in its own nature. And we really do see that very healthy appetite from the regulators to build something that is fit for purpose, which is a real nice shift. And we very much have been enjoying the conversations with FCA, describing our processes, showcasing where can we improve, where should we relax perhaps, and how do we build something that is really suitable for businesses. But maybe taking that a step further, running our Much Bargain facility, we've seen a real push and real appetite from the usual city counterparties where they would actually like to provide a solution. We've been working very closely with Equinity, which is one of the largest administrators of share schemes, typically for public companies. JP Jenkins will be operating mostly in that CREST, traditional London Stock Exchange style environment, where we're executing and trading shares for brokers and settling through CREST. And we have been able to put together a solution with Equinity where we have a way of restricting who comes in and out of that cap table, which is quite novel. That doesn't usually happen in CREST, and Euroclear, CREST have been wonderful as well. We spent the whole Christmas working to build a solution for a company that was joining us, and we have managed to find a solution in a space of 2 months, which is now going to be rolled out and adopted as part of the PISCES initiative. It is a solution that is called escrow. It's typically used, it's one of the tools that Euroclear does have, and we now have a way of operating it. So really it demonstrates how much the city does want to make a difference, and we do crave and miss those vibrant markets. I think a lot of criticism has come from a certain advisory boutique firms kind of thinking, well, is this really going to help the IPO market or is it going to hinder it? And of course, we will have to be testing and seeing how everything is being adopted, rolled out and accepted. But really, I think we're all trying to stimulate the markets rather than say, oh, no, we're just going to try and steal the solution and not really think about the capital markets. we're all working together to provide a suitable solution for companies of a certain size, which is really a pleasure to watch. And Ifti, I can see you're nodding. You probably have a similar experience.
I think you're spot on. The first point that you made around the intervals between market opportunities is absolutely down to the companies. It shouldn't be something, it should be every quarter or 4 times a year or whatever. It's something that should be dependent on the needs of a very, very diverse business arena. The people that we serve, the people that you guys serve at JP Jenkins, there are a different range of people to those at, let's say, London Stock Exchange or some of the other players that might come into this space, because it will be a much, much larger cadre of businesses that could benefit from this.
Yes.
I think the other piece is that I don't think that there will be one mechanism for price discovery or how people will actually set up their auctions. I think there's going to be a lot of learning, and so long as we're open to being experimental, not taking silly risks, I think that's something that the FCA would be very wise to not just counsel against, but make sure that people don't. But to experiment with different modes of providing the service, I think is really important. It shouldn't just be one size or one structure or one mechanism fits all. I think the other piece for us is that the scale of learning and the change that we'll have to go through in terms of sharing between the participants, not just the companies that are playing on the PISCES operator platforms, but between the PISCES operators, somehow getting a forum for sharing best practice and how different levels, different stages of business evolution may be better served by different parts of that market. It's not that you just hold the whole piece in one place. I think, I think there's a lot for us to learn, but the fact that we're getting started is the real key, and that we're willing to take some of these, take on this adventure. Welcome back, Veronika.
Yes,
thank you. I had a slight logistical shift, but yes, very much agree. And I'm excited about actually seeing this development and really testing it. I think it's going to be very interesting.
Yeah, we're at the foothills of a very, very big adventure. I think it is something that it is potentially very global as well.
Yes, and it is interesting, the whole global element as well. We do currently operate with shareholders from across the world. We are really becoming very global, and we live in a global environment. Majority of our clients typically are UK based, but the investor base is very much global, which again is the world is becoming a small place, so we do need to service that area and cater to those requirements.
Well, yes, that's a very good point. And on this attracting new investors point, PISCES is a secondary platform. It's not a new capital raised platform, and that some people have criticised it for that. But actually, I'm sitting here. I'm a compensation and remuneration share plan type person, but I am an accountant by background, and I'm thinking, even just from basic principles, if you've got an exit available through a periodic market, you're much more likely to put your money into a new investment offering from a company than if there isn't one. I mean, it's fairly simple. I mean, putting it in now and they're saying, well, we might do PISCES in 3 or 4 years time. Well, yeah, that's just wishful thinking. But if you've already got a PISCES platform up and running, and you've had, I don't know, 4 or 6 successful trading events, and then going out to private investors and saying, guess what, we need to raise new capital. By the way, you can't flood the market. Maybe there's some hold requirements in the offering document, but you will have an exit. It's a big plus, I would have thought. I mean, Veronika and Ifti agree?
I actually think that's very key point, Damien. At the moment, as you say, this is for secondaries, but the potential for the tools that we develop to facilitate primaries as well is quite obvious.
It is, and I would also like to add, companies can still continue raising capital.
Yeah.
It doesn't stop them. It doesn't run through the PISCES network, but majority or a lot of JP Jenkins clients on our secondary venue are raising capital, and Damien, they're using exactly that particular argument to say, yes, we are raising capital, but we're going to do our best to make sure that there is liquidity should your circumstances change. And I think we addressed that at the very start of the call, to say people's lives change, your situation changes. You sometimes can't predict what happens 2-3 years down the line, and often it's not because the shareholders no longer believe in business, but because their life has changed. Couples have a baby, you have a divorce, whatever the situation is, you may need some capital, and you need to realize a value out of those shares. So you do need to have a facility to actually be able to exit. That also allows the management and businesses to actually just continue focusing on what they do. They don't now have to start rushing to an early exit. And I always describe it to the companies that it's a luxury of time, because yes, you do need to look after your shareholders, but you don't want to make that your primary focus if there is growth in a business. And we see this so often now. Businesses are being sold out to a US or a private equity, and they're being sold too early because they have different internal pressures. So we're going to try and retain those businesses.
You're almost creating a release valve, because as you say, that pressure will build up, and sometimes it's premature to go to that next formal stage for everybody as an organization. But having that release mechanism for some of the shareholders is so critical. And I think we should keep in mind, this has to remain something that is very much driven by the businesses rather than shareholders necessarily. I think there's going to be a balance to be had, but it's still very much, from my perspective, something that the secondary market is for the companies to facilitate something for their shareholders, and it's in their control.
100%, and it goes back to those disclosures and regulatory requirements. We don't deal with single share issuances as brokers, where we're now going to go and sell a block of shares from one individual to another. The company is actively involved and is endorsing those share movements, because they're disclosing whatever they're required to disclose, and they're encouraging people to look at their businesses, so they're no longer invisible. It's a very different mechanism than kind of the traditional US secondary markets that you would typically see, where you have brokers engaging with an individual shareholder and trying to sell. These are typically quite substantial blocks as well. We're talking hundreds of millions in certain circumstances, and selling those blocks to individual private equity houses or so on. This is really trying to create a structure where you have a efficient mechanism that is not too clunky to execute and transact in a safe environment.
There will be a learning environment as well. I mean, I think certainly many of the conversations we've heard about is the risk element, because these companies will not be disclosing as much information. There is a much higher risk profile, so there will be a question as to what the appetite around this is. That said, there are enough of different types of investors with different appetites, and remember, this is this is not for retail investors. I'm not sure if we mentioned that yet. This is very much for professional investors. Yes, it will facilitate retail sales. So, for instance, employee share schemes, as an example, would be able to be facilitated through these platforms, but it's not a retail investment site. So it is sophisticated investors.
Right.
Yeah, sophisticated and institutional. And we've been talking about private companies, which is correct, but I just want to remind everybody that private companies also include subsidiaries of listed companies. just because you're owned by a listed company doesn't preclude that the securities of a subsidiary being listed on PISCES. Now, you might all be thinking, well, why would you want to do that? Well, if you're thinking of spinning something out and you want to price test it, this is a pretty good way of doing it. But you don't have any other mechanic available to generate a genuine open market price. Otherwise, you're looking at something like a placing, which really isn't an open market price. So although we're focusing on private companies, kind of family and startup companies growing, there can be other companies. And I mean, some large companies globally, there's quite a lot of companies globally actually have corporate venturing units where they're investing in dozens of ventures, and most of those ventures don't get absorbed back into the core. Typically, they're spun out or sold in some manner, often through a trade sale, infrequently through an IPO. But PISCES might be an attractive middle route, especially if you want to maintain a majority control of that subsidiary, for example.
Well, thank you very much indeed, Veronika, Ifti, and Damien, for that animated and very positive sounding tour d'horizon of this the whole area of PISCES and its development. I'd like to sort of move on to some Q&A now. There's a question that's come in from Graham Muir, one of the leading lawyers in this space. And the question is, will JP Jenkins and vested platforms cater for the conditional exercise of employee options, i.e. the mechanism whereby employees are issued with new shares, but only acquire the number of shares that they can sell in the relevant PISCES window?
Yeah, it's something we have been thinking about very, very much, because it's a good proportion of our customers, clients who are looking for liquidity opportunities for their share schemes. And understanding what the market supply and demand is going to be part of the experimenting and learning that we'll be doing in those early stages, how to get that balance. Because clearly, once you've exercised, you've got readily, you've got assets, readily exercisable assets, and you need to be very careful so you don't create a mechanism that ends up with people exercising without having a way out.
Absolutely, it would completely defeat the purpose of making employees go through exercising their options and converting into shares, and they're not being able to sell them. So no, this was one of the main reasons why we have been working with administrators to make sure that we can almost operate in that cashless environment where shares are not being, or options are not being exercised and up until the point of a sale. CREST has been perhaps one of the major providers that we have been speaking about creating a bespoke product. I'm sure we'll try and work with Vested as well. As I say, we're already customers and fans. So yes, 100%, creating an environment where the employees are not penalized. This is meant to be an environment where they're going to benefit, not to be penalized.
Yeah, that cashless sale and optimized balance of supply and demand is critical.
Yes.
Great. So a question from me to both of you. You've both been, I'm talking to the two platform providers, you've both been very bullish about this. Is this generally being shared by your clients as well?
Good question. On JP Jenkins' side, our clients have been cautious, and I think that is obviously various reasons. Everyone is looking to see what the institutional appetite is going to be. A lot of clients on our venue would most likely, not all of them would fit that institutional buy-side threshold, really. So really, the important thing for us was to be able to continue running the venue that we currently have and the clients that we currently service, and not again shoehorn them into one particular solution. But we've got some larger companies that do have a lot of employee shareholders that are super excited about the solution, And let's be honest, all of our clients are excited about the tax incentives, like the removal of stamp duty, which is quite significant as well. So yes, it's still a little bit of a mixed view, I would say, but we do have clients that would like to explore this further, that would like to understand what it's going to be like. And we have some clients that are just happy to stay on our traditional match bargain facility, and we'll be monitoring to see how the scheme is really being received.
Yeah. I think for us, I think there's a limited level of knowledge about it as yet. I would say it's probably only relevant for about 10% of our customers, and of those, probably only 5% will even think about it. I'm personally excited because I understand some of the challenges around that locked asset situation that Veronika was talking about earlier. You know, to be able to create that liquidity, I think people should be excited. I'm personally excited, but that doesn't mean that it's going to be a plain sail to a route, a mechanism that works here. That awareness of the market, the desire of the market, the supply demand that we talked about earlier is not going to be easy to reach. But I think it's such an important initiative. But yeah, it's only a handful of clients, as I said, or percentage of clients that will be even relevant for it at this stage. But enough to make it worth as exploring in detail.
Well, speaking as somebody who launched AIM about 30 years ago this year, there is always a sort of slow burn in on this, and for all the advisory firms who are on this webinar, I think it's really, you need to start talking to your clients about it. I know a lot of you are actually out there and doing that, and frankly, if you're not, I think you're doing them something of a disservice. So anyway, as we sort of move towards the end of this, I'd like to start to wind up. And firstly, what I'd like to do is to thank the sponsors again, who we saw briefly at the beginning, and for their support actually enables these webinars to take place. And of course, I'd like to thank you, the audience. We had 60 people turn up this morning, which was a very good showing, and I think shows that there is a lot of interest in this marketplace. And I'd also like to thank our 3 speakers today that guided us so ably around this newish terrain. So thank you to Veronika, Damien, and Ifti. And also, just to remind you that the Esop Centre and Zien's Financial Services Club actually runs a whole series of very interesting webinars, and there's a few of these that are coming up in the next few weeks. And the launch of the Global Financial Centres Index, which is now in its 38th iteration. That's something you'll often see quoted in The Economist and the Financial Times and other leading financial publications. A financial briefing on Taiwan, and a view on Mauritius as a bridge jurisdiction connecting Africa to the future of fintech. So some relatively niche topics there as well. But anyway, thank you all very much indeed for attending this morning. And finally, a little bit of a round of virtual applause to our speakers.
Thank you, everybody.
Thank you for having us.
Thank you, and thank you, Robert, for sharing.
Yes.
Thanks.